Risk appetite is firmly back on today, with buyers emerging across multiple asset classes. Welcome to MTRS_Market Pulse. Here is your India market briefing for August 4th. We cover the Nifty 50, Sensex, Bank Nifty, and the stocks dominating headlines today. Let us start with a snapshot of the Indian equity markets today. Starting with the Nifty 50, India's benchmark large-cap index. Nifty 50 is trading higher by plus 0.95% at 24,615 Indian rupees. Investor sentiment is being shaped by South Korean stocks plunge, erasing RE rally gains as chip sell-off deepens, Nikkei Asia. With Nifty 50 moving sideways today, the market is effectively waiting for a fresh catalyst. The $25,230 level above and $24,000 below are the levels to monitor for the next directional signal. The Sensex, tracking India's 30 largest blue-chip companies. Sensex ticked up plus 0.29% to 78,325 Indian rupees. Investor sentiment is being shaped by South Korean stocks plunge, erasing RE rally gains as chip sell-off deepens, Nikkei Asia. The Bank Nifty, India's banking sector barometer, is closely watched by traders as a leading indicator for the broader market. Bank Nifty is up plus 1.12%, trading at 57,907 Indian rupees. Investor sentiment is being shaped by India RBI seen holding rates as inflation risks stay in focus. The near-term technical picture for Bank Nifty looks constructive. Watch the $60,223 level as the first meaningful resistance zone. A close above there on decent volume would be an encouraging sign for bulls. As always, this is analytical commentary, not financial advice. Now let us look at the stocks making headlines in India today. Hindustan Unilever dropped sharply minus 2.67% to 2,081 Indian rupees. Equity markets are responding to reports that NASDAQ, S&P 500, Dow futures extend gains after hot rally as big tech earnings deliver. PLTR, GMEM, Snap, SLS in focus es.tradingview.com. With the selling pressure we have seen today, the key support level for Hindustan Unilever is around 1,956.14 Indian rupees. A failure to hold there could accelerate the decline and attract further sellers. For a recovery, bulls need to see a fundamental shift in the drivers weighing on prices. This is our view, always do your own research. Infosys dropped sharply minus 1.86% to 1,158 Indian rupees. Investor sentiment is being shaped by South Korean stocks plunge, erasing RE rally gains as chip sell-off deepens, Nikkei Asia. Operating margin trajectory toward the 19 to 21% target is back on track. The risk is North America financial services softness. Any new large deal announcement, particularly in European manufacturing, would be a meaningful catalyst given the diversification it signals. Now let us look at the macro backdrop for Indian markets. The rupee is strengthening against the dollar, trading at 95.38. A softer rupee compresses margins for import-heavy sectors like oil, consumer goods, and airlines, while IT exporters like TCS and Infosys benefit. Investor sentiment is being shaped by Wall Street closes down sharply after Fed holds rates unchanged. Foreign institutional investor flows are the near-term swing factor. Any risk-off in global markets tends to amplify selling pressure on Indian indices given the high FII ownership in Nifty 50 constituents. The biggest mover in India today is Hindustan Unilever. Hindustan Unilever dropped sharply minus 2.67% to 2,081 Indian rupees. Equity markets are responding to reports that NASDAQ, S&P 500, Dow futures extend gains after hot rally as big tech earnings deliver. PLTR, GMEM, Snap, SLS in focus es.tradingview.com. The technical picture for Hindustan Unilever has deteriorated. The 1,956.14 Indian rupees level will be critical to monitor. It represents a key line in the sand for bulls. A break below could trigger further stop-loss selling. Manage your risk carefully. Here is what we will be watching closely in the days ahead. Keep a close eye on central bank speakers and rate commentary, and key economic data releases. Any one of these could be the catalyst that defines the next major directional move. Independent market coverage, no subscription fees, no paywalls. If this analysis saved you time and helped you think more clearly about the market, Please like the video. It costs you nothing and it directly funds more content like this. Subscribe for daily coverage across indices, stocks, commodities, forex, and crypto. Tell us in the comments, what are you watching most closely right now? That is all from MTRS_Market Pulse for today. All analysis is for informational and educational purposes only and does not constitute financial advice. Always consult a qualified financial advisor. Trade safe and we will see you in the next one. That is your India market briefing from MTRS_Market Pulse. Subscribe for daily coverage of Indian and global markets.